Hi guys, welcome back. So I want to share a few stocks that I would be interested to buy the dip. Before I begin, let's look at the Asian market. Because I said that the Shanghai Composite had a nice breakout last week and continue the uptrend, I expected to consolidate a little bit or have some pullback, but seems like it's quite strong holding and it doesn't want to fall back down. As you see, it has been 4 days already that every time it backtests a little bit, it would come back up right away. If you look at today's movement, it's quite interesting. It went up high and then suddenly dropped very fast up to almost 1%, but had a V-shaped recovery. It seems like the index does not want to drop down further than that. And then, on the other hand, the Hang Seng Tech Index had a little bit pullback last Friday, but today had gained 2.3%, a nice jump from there. I think overall the Chinese markets had been performing very well, and I do see this to continue. The volume had been increasing recently. I think I've seen that there have been many days since the capital just keep flowing into the Chinese market and through the Hong Kong as transit. So recently the Chinese government is actually starting to regulate the money inflow from outside of the country to in, because I think it's too much for them and they actually want to restrict it. It's the first time I hear it. Normally they would restrict the money outflow to other countries, but this time they are restricting the inflow because they are afraid the inflation would come inside. So it seems like right now the smart money continues to get inside the Chinese market to hedge against inflation. And I think this is also to respond to the RMB to continue going stronger and the dollar to continue going weaker. And the Nasdaq's future had been in the red zone for the whole day and now is wandering between red and green, very indecisive. So let's see if this short squeeze can push the index back to some all-time high again. So today I want to share with you a few stocks that I want to potentially buy the dip as some short to medium term position. And the first one is Mesa, ticker symbol MESA. If you remember, I have bought Mesa back then when it was $6 and I took profit from Mesa twice already. And this time I am looking forward to do it again for the third time. So why Mesa? Because right now the airline industry is recovering. I just saw that a report from the American Airlines shows that right now the airline had been recovered to the new high since last year in March, and it's only about 20% less than 2019. And I told you before I want to buy back airline before summer, the high season of traveling and after the economy reopens. As I said for Mesa before, I think that once the economy reopens, the flights that recover first would be likely domestic flights because the government would encourage domestic traveling first, as the border is still quite restricted. And different countries have different scenarios to have the COVID under control. So I think that domestic flights would recover first and it would benefit Mesa as they are carrying a lot of regional flights for companies like American Airlines and United Airlines. And Friday, we had a little bit of sell-off there. I don't know what happened. There was no news about that. And in fact, other airlines were growing slightly or slightly decreased. Maybe just more of consolidation, but I don't know what happened with Mesa. It had a decline of 12% with spike of volume too. So we see the selling pressure was quite high. So either this is a little bit final shake off, or it was some insider or institution knowing something before we do, and that's why selling off without any news. In this case, we would find out later what's the bad news. If it's the first situation, great, that is the last shake off. If it's the second situation, oh well, then I might be trapped for a while. But overall, Mesa is still an undervalued company. The price right now is still under the book value of the whole company. The PB ratio is still 0.7. That means the book value of the company should be around 12 or 13 to be more justified. So I think it's okay to give it a shot. For short-term trading, you can set a stop loss to be maybe 9, or according to your own risk tolerance, how much you're willing to risk. For me personally, I have a bigger risk tolerance, and I might even average down more if it gets to, let's say, 8 to 8.5, and then I will set a stop loss from there. But I gotta tell you that I will sell out of all my recovery or airline position before the peak. Actually should be around July or August, when it was the most high season of traveling, the busiest time for traveling. I would be selling out of my position. Maybe sometime before or at the earning of the airline companies. And the second stock I want to share is CAN. Ticker symbol CAN. We bought CAN last Tuesday, when it dropped to 7.4. And then after that, it had a good run up. Some of the Discord members should have taken profit already. They were beaten down for multiple reasons. First of all, it was the correction of growth stocks. And then second, the attack of a lot of Chinese companies because of the SEC laws. And then the crypto crash drive it down further. And last, the crackdown from the Chinese government to regulate crypto mining activity, of course, gave it another big hit, because they make and sell crypto mining machines. So all these happen and make their share price drop from 32.8 down to the lowest of 7 on Monday and Tuesday. Yeah, because they are, of course, the most affected by the crypto activities and the regulations on the government. But I think regardless of the short-term price action of Bitcoin or other cryptocurrency, people still need mining machines. And also, they don't only sell to clients in China. I think they sell to clients all over the world. So even though China really restrict the mining activities within China, they cannot do anything about the export. And most importantly, I think they have the order that was made already before all this happened with deposit. So I think their revenue for 2021 would be very unlikely to be affected by this policy. For example, in February, they have announced that they have improved the revenue visibility in 2021 as a result of attaining purchase orders totally more than 100,000 units of Bitcoin mining machines from customers in North America. See, it's not even in China. And many of those orders were placed with prepayment, so it's very unlikely to change or cancel. And it's taken up the company's manufacturing capacity entirely for the full year of 2021 and beyond. So that's why they are not even worried about the sales this year or even further than this year. That is why the change of Bitcoin's price would be very unlikely to change their revenue this year, or the regulation from the Chinese government. It's very unlikely to affect their revenue. And on top of that, crypto mining machine is not even their only source of income. They have a strategic partnership with Northern Data, AG in the areas of artificial intelligence development, blockchain technology, and data center operations. So we see the blockchain technology is only one part of the revenue for them. Together with CAN, SOS, EBON, EBON, and Xinlei, XNET, they are like brothers. They often react quite in a similar way to any news related to crypto. So they're kind of like brothers for now. SOS might be more shorted, so potentially short squeeze. EBON had been shorted by the Wolfpack research before, but at the same time, we can see that a lot of the institutions or ETF own this stock, so it's very unlikely to be a scam as written by the short report. And Xinlei is more stable out of the four, so it's up to you which one you want, because they kind of work together anyways, at least for now. So that's why I think the recent drop after another drop after another drop might be mainly driven because of the market sentiments. People are quite fearful and scared about this. They don't know what's going to happen with crypto, the future of it, the regulation from government, etc. So I think it might be okay to give it a try. For short-term trade, stop loss around 7 to 750. If it drops below 7, chances are there would be lower low, more than likely, if it does. And the last one I want to share that I would potentially buy the dip is QuantumScape, ticker symbol QS. I think I've shared this before already. I bought the dip at 24 and I took profit after 10% rise. But right now I think it is still a very heavily shorted stock. Investing in QuantumScape is a little bit like investing like venture capital, like Virgin Galactic, because it's pre-revenue. For Virgin Galactic, we just saw the test flight, but for QuantumScape, we haven't even seen the prototype yet. So it's very much like venture capital. But if they happen to succeed, the potential reward would be massive as well, especially when you consider the application it can apply to when they have the solid-state battery. Now remember that Soros, a big hedge fund institution, bought in QuantumScape when it was $80-something. So right now it is only 25% of his cost. So knowing that, at least it makes me feel a little bit better to get a bargain, much lower price than the institution, the big dog. I think right now the whole world is fighting with their battery to see who can develop the best battery before the others. We know China and Japan are working very aggressively on this. And I'm not surprised if somewhere in China, especially the CATL, might be working through some very advanced battery technology there. So there is no reason that the US would not want something like QuantumScape to succeed. Even Cathy Wood said Volkswagen has a very good probability to transform from traditional car company into the EV company. So in a way, she might somehow be implying that QuantumScape might be working towards something good, given the high possibility that QuantumScape would be the main supplier for battery for Volkswagen. Also, we know that President Biden is working towards the big stimulus package, and he really aims to increase the R&D cost for US, especially in new energy. And there is no reason QuantumScape cannot benefit from the R&D investment, right? That is just what I think for now. Just like CAN or Mesa, we don't know whether this is a bottom for the share price. So for short-term trading, it might be a good idea to keep a stop loss according to how much you're willing to risk, or at the support level, the previous low of 23.7. If you want to invest like for a longer term, like venture capital, then it might be a better idea to slowly build the position to dollar cost average, let's say every time it dips 10 to 20% from the last time you buy, then you can add in again. For me personally, if I happen to buy the dip, I would treat it more as a short to medium term investment. Last time when I bought in, I had 10x my investment, but I don't expect to 10x again this time. Given so much market volatility recently, the uncertainty is still quite high. Like I said, we are dancing as long as the music is still on, but we just remember we need to dance near the exit. So then whenever there is another fire coming, then we can run fast. So we can always have the cash to buy lower dips. Okay, now that's it for today. And if you have enjoyed this video, please give me a big like and write me a great comment. And I will see you tomorrow. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.